Welcome back to Explain the Charts, everyone. We're thrilled to have you join us today, August 15th, 2025, as we embark on a crucial and comprehensive, in-depth analysis of QQQ, the Nasdaq 100 ETF. Our approach will meticulously integrate both the very latest market news headlines and the intricate details found within its candlestick chart data across multiple timeframes. The financial world is currently fixated on a hotter-than-expected PPI inflation report, which, as widely reported yesterday, August 14th, triggered a noticeable and immediate slip across major U.S. indices, prominently affecting the Dow, S&P 500, and particularly the technology-heavy Nasdaq. This persistent inflationary pressure has, predictably, put a considerable damper on lingering hopes for near-term interest rate cuts, adding a palpable layer of caution and uncertainty to the broader market sentiment. However, it's absolutely vital to highlight that despite this recent macroeconomic headwind, the Nasdaq Composite has, just recently, managed to achieve impressive new record intraday highs, showcasing its inherent and remarkable strength even amidst challenging economic indicators. Beyond the immediate day-to-day price movements, we're also observing promising long-term strategic developments for the Nasdaq exchange itself, such as its innovative new partnership with AWS and an ambitious ongoing push towards offering 24/5 trading hours. These initiatives are significant as they signify robust infrastructural growth and could significantly bolster market liquidity and overall investor confidence in the tech sector over the long haul. Understanding precisely how these fundamental news catalysts translate into specific price actions on the charts is paramount for any astute trader or investor. It's particularly important to recognize that pre-market activity, often heavily driven by breaking news and accumulated orders, frequently sets the crucial opening tone for the official trading day. With this essential context firmly established, let's now seamlessly transition our focus to the one-day chart, where we can begin our examination of the broader historical price action of QQQ over time. Upon observing the entire provided history on the daily chart, it becomes undeniably clear that QQQ has been immersed in a pronounced and consistent uptrend over the past year, characterized by a well-defined sequence of higher highs and higher lows, indicative of sustained bullish momentum. Yet, this impressive and steady ascent has certainly not been without its moments of significant turbulence and sharp, yet ultimately healthy, corrective pullbacks, which are a natural part of any long-term rallying market. For instance, carefully observe the sharp dip that materialized in mid-April of 2024, where QQQ experienced a considerable fall from around the $440 mark. Despite the intensity of this decline, it found robust support and bounced back vigorously from the crucial $413 to $415 range, a testament to the strong underlying demand at those levels. Following this pivotal rebound, the ETF then embarked on a powerful and sustained multi-month rally, confidently breaching the psychologically important $500 mark in July 2024, effectively converting previous resistance into new, reliable support. Another notable corrective phase strikingly unfolded in late February and early March of 2025, during which QQQ retraced sharply from its recent highs above $530, dropping efficiently towards the established $488 support level. These types of significant price corrections, often directly triggered by broader economic concerns or specific sector-related news, typically present attractive opportunities and attract renewed buying interest, acting as strategic accumulation points for savvy investors. The consistent and remarkable resilience QQQ has repeatedly demonstrated in bouncing back vigorously from these substantial pullbacks strongly suggests a deep underlying demand and unwavering investor conviction for the technology-focused ETF. Such recurrent and strong recovery patterns vividly underscore the inherent strength and intact nature of the long-term trend, even as short-term news events introduce temporary and often sharp fluctuations that test market resolve. The overall long-term bullish channel remains impressively well-defined, providing a clear visual representation that buyers have consistently stepped in to actively support price on every significant dip, maintaining the upward trajectory. Let's now meticulously zoom into the one-day chart, focusing with laser precision on the intense and recent price action from early March 2025, leading right up to the very latest completed candle on August 14, 2025. You can distinctly observe the powerful continuation of that previously established upward momentum, which has triumphantly propelled QQQ into truly uncharted all-time high territory in recent trading sessions. Most notably, on August 14th, QQQ impressively touched an intraday high of $581.88, definitively marking a brand new, never-before-seen record in our comprehensive dataset. However, the subsequent price action saw it close notably lower, at $579.89, culminating in the formation of a daily candle with a pronounced long upper wick and a closing price comfortably below its opening price. This particular candlestick formation is a classic and reliable signal of aggressive selling pressure emerging precisely at the highs, indicating a strong likelihood of profit-taking or a distinct rejection of higher prices by market participants. This visible bearish signal emanating from the candle's specific closing behavior directly correlates with the macroeconomic news we highlighted earlier. The hotter-than-expected PPI inflation report undeniably triggered both profit-taking and injected a significant dose of bearish sentiment into the market, following the initial burst of euphoria from hitting a new peak. The low point of the August 14th candle, which hovers approximately around $577.91, now serves as a critical and immediate short-term support level that bullish traders will undoubtedly be keen to defend with strong conviction. A sustained break and confirmed daily close below this crucial $577.91 level would most certainly open the door for a deeper and more meaningful retest of prior established support zones. In such a compelling bearish scenario, the market would almost certainly target the $572 to $573 range, a price zone that previously provided a significant and reliable bounce point earlier this month on August 11th. Furthermore, a confirmed breakdown below the August 11th low of $571.57 would unequivocally shift the immediate short-term sentiment to a distinctly more bearish outlook, making the $560 to $562 area the next supremely crucial level to monitor closely for either a potential rebound or an acceleration of the downside momentum. To dissect yesterday's complex market reaction with even greater analytical precision, let's now seamlessly transition to the one-hour chart, allowing us to meticulously scrutinize the intricate intraday movements throughout the entire trading session of August 14, 2025. Observing the period surrounding the likely release of the influential PPI data, specifically around 12:18 Universal Time Coordinated, we immediately observe a substantial and forceful bearish candle, graphically reflecting the market's swift and pronounced negative sentiment. Despite this initial sharp and sudden decline, we can clearly see that determined buyers quickly stepped in, attempting to push the price back up towards and even briefly beyond the previous intraday highs, indicating some inherent resilience and underlying demand. However, the subsequent sequence of one-hour candles reveals a clear and persistent struggle for sustained upward momentum, with prices consistently failing to firmly hold onto those peak levels for any extended period. The noticeable increase in trading volume accompanying some of these downward hourly candles strongly suggests that selling pressure was indeed significant and broad-based, possibly hinting at a short-term exhaustion of the upward rally from the recent highs. Monitoring these hourly closes and diligently analyzing their respective candlestick formations can provide absolutely invaluable real-time insights for agile short-term traders aiming to capitalize on or effectively manage intraday volatility around major market-moving news events. For the most granular and exceptionally detailed examination of yesterday's pivotal price movements, we are now zooming in even further to the 15-minute chart, specifically highlighting the extremely volatile period from 11:48 Universal Time Coordinated to 14:48 Universal Time Coordinated on August 14th. This ultra-detailed view vividly illustrates the dramatic and immediate plunge that directly followed the critical PPI report's release, graphically represented by the notably large, high-volume red candle that initiated precisely at 12:18 Universal Time Coordinated. The subsequent swift rebound attempts, which were then met by equally clear rejections around the $581 level, powerfully highlight the intense and ongoing battle between bullish and bearish forces, effectively defining the crucial intraday resistance point. Crucially, observe the substantial spikes in trading volume that consistently accompanied these rapid and sharp price movements. These volume spikes unequivocally underscore the heightened intensity of market activity and the immediate, strong investor reaction to this significant news event, providing clear signals of conviction or capitulation. Analyzing these shorter timeframes is absolutely essential for proactive traders who seek to identify highly precise entry and exit points, especially when reacting swiftly to fast-breaking economic news or attempting to accurately anticipate very short-term reversals from key support and resistance levels established within the trading day. Bringing all our analytical insights back to the overarching one-day chart, let's now consolidate our comprehensive findings and carefully outline the most probable potential future scenarios for QQQ. The immediate short-term outlook for QQQ truly presents a nuanced and mixed picture, as the market currently grapples with the ongoing process of digesting the higher-than-expected inflation data. Simultaneously, it faces the formidable challenge of contending with the overhead resistance established at the newly minted all-time high of $581.88. For a compelling short-term bullish continuation, QQQ absolutely needs to demonstrate a decisive and convincing break and, crucially, sustain a daily close above the $581.88 level. This significant breakout would ideally be accompanied by a surge in trading volume, noticeably higher than average, to confidently confirm genuine buying conviction and overcome any lingering selling pressure effectively. If this strong and confirmed breakout indeed materializes, the likelihood of QQQ swiftly targeting the $590 psychological level and potentially pushing even further towards the significant $600 mark in the coming weeks would become considerably reinforced and highly probable. The overall probability of this highly bullish scenario unfolding is substantially boosted by any forthcoming positive economic data surprises, particularly clear and consistent signs of easing inflationary pressures, or any distinctly dovish pronouncements from the Federal Reserve regarding its future interest rate policy trajectory. Conversely, for a compelling short-term bearish reversal, a sustained break and confirmed daily close below the $577.91 support level would serve as a powerful and unambiguous indicator of underlying weakness and a shift in market sentiment. Should this immediate critical support fail to hold firm, we would then anticipate a subsequent and more pronounced move towards the next key support zone, which clearly lies around the $572 to $573 area, a price zone that has historically provided reliable bounces in previous trading sessions. A confirmed breakdown below the $572 mark would unequivocally suggest that a deeper, more substantial correction is indeed underway for QQQ, potentially leading to further capitulation. In such a bearish scenario, the stronger and more established long-term support zone at $560 to $562 would immediately come into sharp focus, acting as the next potential floor where buyers might step in. The overall probability of a more significant and extended correction substantially increases if future inflation reports continue to disappoint market expectations by consistently coming in hot, or if the Federal Reserve signals a more aggressive, hawkish pivot in its monetary policy stance, indicating tighter conditions. From a broader, longer-term investment perspective, QQQ continues to reside firmly within a robust and well-defined uptrend, consistently demonstrating remarkable resilience and impressive recovery after even sharp and sudden pullbacks. This inherent long-term strength is predominantly attributed to the continuous innovation, strong financial performance, and persistent demand for its underlying technology components, which remain market leaders. Therefore, patient long-term investors may very well view any significant and sustained dips, especially those that retest established long-term support levels such as $560 or even $550, as exceptionally attractive opportunities for strategic accumulation, allowing them to add to positions at favorable prices. Beyond strict price levels and technical patterns, keeping a vigilant and informed eye on crucial upcoming macroeconomic indicators, including forthcoming consumer price index releases, any further producer price index revisions, and, perhaps most importantly, the highly anticipated Q3 corporate earnings reports from major Nasdaq-listed technology companies, will be absolutely paramount. These corporate earnings reports have the potential to profoundly influence sector-specific sentiment and can either powerfully confirm or fundamentally challenge the current overall bullish trajectory of QQQ, acting as significant catalysts. Finally, for all trading decisions, always pay close attention to accompanying trading volume. A clear surge in volume coinciding with upward price movements unequivocally signals strong buying conviction and validates the rally, while elevated volume on downward moves indicates significant and sustained selling pressure, which is crucial for confirming true trend strength or weakness. By meticulously integrating these comprehensive fundamental and technical insights into your analysis, you are undoubtedly better equipped to confidently navigate the complex and ever-evolving dynamics of the Nasdaq market and make more informed, strategic trading decisions. Thank you once again for tuning in to Explain the Charts for this exhaustive deep dive into QQQ. Be sure to subscribe, hit that notification bell, and stay tuned for our next comprehensive market analysis.